All right, so we have talked about Delirium trading plan. We have talked about the filtering process trading plans or the inspiration for that, etc. Now I want to give you inspiration, etc. for a flow trading plan. So what does a flow trading plan look like? A flow trading plan, again, there's a reason why we went through Delirium first, and then we went through the filtering process trading plans, and now we are going through a flow trading plan. And that is because it's more advanced. I feel like it's more so you need some kind of more skill. And what I mean by that is you need to understand the basics very well. If you can understand the basics at a very advanced level, then the flow trading plan will be great for you. And again, a flow trading plan, what are we doing? We are focusing on one instrument at the time. So what I've also written down, I've written a few things down. I need to give you a disclaimer as well, of course, is that you either master a condition or you master an instrument. And what I mean by that is, with mastering a condition, I'm mainly aiming at a filtering process. So with a filtering process, we are constantly scouting for the right conditions. Not necessarily on what an instrument is doing or how is it moving. It's usually moving like this. No. We are mainly mastering one condition. On an instrument, so on a flow trading plan, you are truly trying to master that instrument in itself. That is very important to understand. So as well, if you are focusing on one instrument, what happens? It has its pros and cons, right? Now, I'm not saying one is better than the other because I think they're both equal. It's just whatever you prefer at the end of the day. Eventually, you can look to potentially master both. But for the first years, I want you to focus on either a filtering process trading plan or a flow trading plan. Not both. Don't mix them. You either focus on a flow trading plan or a filtering process trading plan. With the time frames we aligned, etc. That is very important. Now, you are going to be, with a flow trading plan, a hybrid trader. You can trade a lot of different conditions. Now, what I mean by that is that, of course, it is still high probability conditions, but it's constantly a different scenario. You're mastering that instrument because you can't switch from instrument to instrument to look for another high probability condition. No, you're sticking with the same conditions. Doesn't mean, of course, that you have to trade every single condition, but you need to be sort of a hybrid where it's not super high probability, but you can still trade it. That is very important. You still likely know what it's going to do. You are, your intuition, your experience is very high in that case. So that is why I've also written down. Why is the flow trading plan more difficult? Because I feel like it's a more difficult trading plan. I always have a difficult time as well trying to explain it. And right now, I feel like I've prepared well enough right now for this video to explain it as best as I can currently. Again, with future insights, I might even be able to explain it a bit better. But right here, why do I think the flow trading plan is more difficult? Because you need to be able to combine all the time frames correctly, and you are really understanding of the basics. You have a great understanding of the basics, as in you understand structure on a very high level. You understand order flow on a very high level. You understand candle signs on an extremely high level. Because for a flow trading plan, you are not going to be waiting, or you don't want to be waiting ideally, for when is the daily fair value gap? Are we going to trade into that? All right, we have a daily fair value gap. I want to look for a 15-minute entry right there. No, you want more opportunities because you are very limited to already a lot of opportunities because you're focusing on one instrument. So candle signs is the main factor that you want to be focusing on in a candle signs, and as well a market structure, etc. Those are very important, but candle signs is going to be extremely crucial for your flow trading plan. That is very important to understand. So I've written down as well, you are looking at every next candle. Where can it expand towards? So that is again the candle signs factor. You're constantly scouting, and that is also the 1 hour in the daily. Where can the next candle expand towards? Constantly, you're seeing, you're aware. Which phase are we? Are we in an expansion phase of the fair value gap? Are we in a retracement phase? Are we in a consolidation phase? That is something you want to be very aware of at all times. So then, right here, I've also written down is the basics really get touched on is what we talked about. I just want to get these things out of the way before we actually start to talk about it as well. So disrespecting is also a boundary to go into the lower time frame. That's exactly what I will touch on, don't worry. Then I've also mentioned you are constantly monitoring the fair value gaps, as in where are the fair value gaps being created? What are the fair value gaps doing? Are they expanding? Are they following through, etc.? That is extremely important. You're constantly monitoring that. So then, as well, knowing which candles you are trading. You always want to be trading expansion phases. You want to know which candles are we trading. Are we trading expansion phase of those candle signs? The three candles we have, we want to trade the expansion phases. That is very important. So we also mainly focus on 1 hour PD rate, 1 hour PD rate. That is true. But you still need to be aware of the 15-minute and 5-minute fair value gaps, etc. And you can't just keep on trading 1 minute order flow lags, etc. everywhere. That is very important as well to understand. Exactly what we'll touch on. So with a flow trading plan, I want you again to understand that this is the best for indices, I would say. And yes, you can also use this on Forex, but you need to understand indices are more volatile. So more volatility, more opportunity. So for a flow trading plan, I would advise to either focus on NASDAQ, ES, or YM. That is US 500, US 100, or US 30. That is important to understand. You can focus on Forex as well, but I would advise indices. Which time do you trade for the indices? Ideally, you want to be trading between 0830 and 16, so 4 p.m. 8:30 a.m. or 4 p.m. New York local time, of course. Again, even more ideal, 9:30 between 16 right there. That is where you want to be focusing on. That is your main focus. That is where your main focus is going to be for an indices trading plan. London, you could trade it, but it's not as high probability in my opinion. So that is very important. That is what you mainly want to be focusing on. Now, then if we look at the actual instruments itself, they are of course correlated with the dollar. So for a flow trading plan, you can fully focus alone on the NASDAQ, ES, or YM alone. Again, don't switch between them. You want to focus on one only. You constantly focus on one. Again, sometimes another might have a better opportunity, etc. But you chose a flow trading plan, so stick to it. That is the same if you chose a filtering process trading plan, then stick to it. That is very important. If we're constantly switching between things, we will never master something. That is very important to understand. For a flow trading plan, and for NASDAQ, ES, or YM, whichever one you choose to trade, you can look at the dollar to create your buys as well. On the weekends, etc., you can look at the dollar, but it is important to understand you only look at the dollar on the higher time frame and above. So 4 hour and above only for the dollar. You don't look at it below that. That is very important to understand as well. Now, that is only for your top down. So if we move into the Notion, again, I have a Notion below this video right there, which you can look at. It's called Flow, and the Flow trading plan is basically that. But again, all the insights I will give you and to fully understand everything, I will give it you right here. Now, we have no filtering process, one instrument inside the Notion. Then we have daily PD rate, time, 1 hour is your compass, 1 hour PD rate, 5 minute or 1 minute ST plus re. Disrespect 1 hour, 15-minute PD rate, 1 minute ST. I'll explain everything here. We first need to understand that we are still doing a top-down analysis. So we still want to be aware. What is the monthly doing? What is the weekly doing? What is the daily doing? But we are monitoring it in a slightly different way because we are more so paying attention to candle signs. We are constantly focusing where is that next candle likely going to expand. Because in a filtering process, you can constantly look and you can constantly go onto the higher time frame and see and demand a new 4 hour fair value gap and demand this. If we demand constantly a 4 hour or daily fair value gap in a flow trading plan, then of course we might only take 2 trades a year. So that will be very difficult, right? So we want to have more things to do, essentially. That is important. So again, that requires more focus, more skill, because you really need to pay attention to what is happening in price. And then eventually you can master that as well, of course. That is very important to understand. So the thing we want to do, we want to focus on monthly, weekly, daily, and then into the 1 hour. The 4 hour, You don't necessarily need it. You can be aware of what it's doing on the fair value gaps, etc., but you don't really need it, in my opinion. You can use it if you want to. So if we look at Nasdaq right here on a monthly basis, then we want to very much pay attention to candle signs. As in, where is the next candle likely going to expand? Based on this candle, that candle that came into the fair value gap, this fair value gap right there, based on fair value gap, the candle right there, that candle came into the fair value gap, had a nice expansion higher. So that is nice, because based on candle signs, we could say, all right, then this candle likely wants to expand higher as well. Based on this candle right now, we can confidently say this fair value gap is not strong enough. It isn't really following through, right? So then it might want to head for this fair value gap with an overlapping part potentially. So you have one, again, what we talk about, we have one fair value gap. There's no difference between one fair value gap and the other fair value gap. So price might want to seek an overlapping part right there. So that could be interesting. Now, how can we deliver towards that? On a weekly basis, we have, again, we can see already that is not really following through. That monthly fair value gap is not following through right there. Perfect. On a daily basis, what are we doing as well? We had an ST, we had a rewrite there, but again, we are not following through again. Perfect. So then we have something to work with. Now, I want you to understand that daily PD rate to daily PD rate, it is a utopia. As in, yes, we focus on that. We focus on constantly finding daily premium arrays to discount arrays to premium arrays. But the 1 hour in this flow trading plan, in this trading plan, is superior. As in, the 1 hour will constantly guide you to wherever the daily, etc. wants to navigate towards. That is very important. But you are still aware of the fair value gaps, etc., whatever it wants to do at that time. That is very important. So for example, we have this ST right there. We have this rewrite there. And here price fails to follow through higher. So price has this big move down right there and that down candle. So once we have that, we also create this daily fair value gap that is sitting right there. Perfect. Now we want to go into the 1 hour time frame and we want to use the 1 hour as our compass to see what price wants to potentially do and what it wants to gravitate towards. Because it can also gravitate towards these lows because they are the targets, of course. Why are they the targets? Of course, not seen in hindsight, but right there, we didn't follow through on these highs, on these fair value gaps right there. So we didn't follow through and take out these highs. So we know once this down move happens right there, price is truly bearish and wants to navigate towards those lows right there. Purely based on paying a lot of attention to candle signs in those fair value gaps as well right there. That is extremely important. So then in the 1 hour time frame, what do we actually see? Well, we have this daily fair value gap to work with right there. If we just follow along with price, and I mainly want to focus on this bit right here, this bit right there. Now, right here, what are we seeing? We are using the 1 hour as our compass. We talked about time, so we mainly want to focus on executing in between 8:30 and 4 p.m. So then the 1 hour is our compass, meaning that we constantly monitor what the 1 hour is doing. You want to pay very close attention to to everything, to 1 hour structure, order flow, and candle signs. Now, candle signs is going to be extremely important because that is where the most opportunities are going to be. Now, right here, when we look at price, again, we mainly want to be focusing on that 8:30 between 4 p.m. So not really in London session. We have this fair value gap higher right there. That fair value gap, at first glance, we could argue that it wants to trade into that fair value gap, into that daily fair value gap that is sitting there above that high, because it has a fair value gap higher. So ideally, what could we see? Well, price might want to continue higher off of that fair value gap into that daily fair value gap right there. All right, that is not a crazy thought, but then what happens? In London, it doesn't follow through. Again, we don't want to trade London ideally. And then afterwards, what do we see? We start to disrespect this. So we start to fail to follow through right there off that 1 hour fair value gap. Again, this is where the very details come in. The details are coming in that this fair value gap is not following through, because if that fair value gap was following through, what would we have seen? We would have already seen this candle create the first part of a new fair value gap. So this candle is the first part of fair value gap. This candle should have been that expansion phase. And then that third candle would have been the close, would have been the actual creation of the fair value gap itself, which didn't happen right there. So then we start to continue lower right there. All right, that is not what was supposed to happen based on candle signs, etc. Again, this is very advanced. This is extremely advanced because you need to have a great understanding of what you're doing right here. So right here, we can see, boom, we are fully disrespecting it. Disrespect 1 hour, what you can see in the Notion as well. Disrespect 1 hour, 15-minute PD ray, 1 minute ST. What do I mean by that? We are disrespecting something on the 1 hour. So you are seeking, now going into the 15-minute time frame, to look for a boundary to go into the 1 minute time frame. So disrespect fair value gap, 15-minute boundary, PD ray, boundary same as PD ray. We want to have now a boundary to go into the 1 minute. We want to have a reason to go into the 1 minute. Disrespect fair value gap right there. That could be our boundary. That could be our PD ray. We have 9:30 as well opening there. Perfect alignment with time. So time is responsible for that push into that 15-minute fair value gap right there to then continue lower, to continue price lower, and to eventually target all these lows that are sitting right there. Perfect. That is what we want to do. So 15-minute, that is our boundary right there. Then in the 1 minute right there, we just want to scout for a 1 minute ST. Boom. There it is. That is your entry, covering the intermediate term high right there, targeting a 1 to 2. A 1 to 2 is perfectly fine. Don't go for crazy targets. A 1 to 2 on a 1 minute time frame is perfect. That's all you need. So eventually, if you missed that ST entry, then this is of course also a good re-entry covering the short term high right now. If you enter off that ST, you want to cover the intermediate term high. If you enter off the re, you want to cover the short term high that is right there. So that is how you want to be navigating those time frames, etc. Now, it is important to understand that you are not following the 1 minute order flow lags constantly. Why not? What I just mentioned as well at the beginning is you are constantly trading an expansion phase. That is very important to understand. You are constantly being aware of what the candles are doing, what the candles are telling you. So you need to have the time frames in context of one another. That is just the very basic what we touch on in the filtering process, etc. as well. But you need to be aware of which candles you are now trading. That is more advanced. That is more candle signs. So what do I mean by that? This trade, that 1 minute ST trade right there, was taken at 9:48. Remember that. It was taken at, let's put an anchored text right there. 9:48 right there. It was taken at 9:48. If we zoom out to the 15-minute time frame, then we can see at which candle did we trade that 1 minute. Right there, 9:45, because that's where it opened. Perfect. So what are we doing essentially there? We are trading the expansion phase of the new fair value gap. Why? We traded into that fair value gap. Once we trade into that fair value gap, based on candle signs right there, what are we seeing? It's respecting. So for price to continue lower, what will it do? It will create a new fair value gap lower. So this is your first candle. This down candle, I want to be very clear on this. This down candle is that first phase of your fair value gap potentially being created. Then this is your second phase of that fair value gap being created. Then this is the third phase of that fair value gap being created. You can trade both. You can trade the three phases right there. So you can trade this, and this phase. But that is where you want to stop trading. Why is that? Because based on candle signs, again, the longer we wait right there. So this candle tradable, this candle tradable. The third candle right there, so this candle right there, is already a bit iffy. It's already a bit more. And then that fourth candle, you don't want to trade that. And what I mean by that is, with trading that, I mean going into the 1 minute to follow the 1 minute order flow lags lower. That is very important. So what do we need now? We need a new boundary. That 15 minute right there is our new boundary. So what do we see? We again can look at a 1 minute ST. Where do we have a 1 minute ST? We have a 1 minute ST right there. Do we get tagged in eventually? We don't. Perfect. So right there, that might have been an entry right there. You cover the short-term high. You go for a 1 to 2, potentially. Right there. All right, that could have been an entry. Now again, let's see which candles are we trading right there. This execution was at 10:36. And the one before that, of course, if you were to enter somewhere around here, would have been 10:30 maybe. Same candle. So right here, we need to understand this candle is tradable. That's the first candle. That's probably, as I like to call it, that is your reversal candle. That candle is going to make the reversal. The same here. That candle might not expand just yet. That is the cause for the reversal. That is your candle signs candle. As in, that is the one you want to see it respect the fair value gap. Then the next candle right there, that is where you ideally want to get involved. 10:30. Again, which candle are we trading there? We are trading the expansion phase of the candle. Perfect. That is the one we want to be trading. That candle is already iffy. Why is that already iffy? Because then it is creating a new fair value gap, or it's potentially on the edge of creating a fair value gap. This candle is not what we want to be trading. Then again, we can look at potential a 1 minute ST right there. See the difference? What is happening? What is happening? Already. Again, I didn't even go into the 1 minute time frame just yet, but what is happening? See the difference between the respect between this fair value gap, that fair value gap, this fair value gap. So, I mean, this fair value gap, that fair value gap, and this fair value gap. What is happening right there? We are not really respecting, we are not really following through like we did on that fair value gap and that fair value gap, right? And we can see that on the 1 minute time frame because we are not really creating a nice ST right there. We had an ST right there, but we had to follow that re already right there. It's not really nice. We are then, again, this might have been a loss. Again, let's face it, might have been a loss. Perfectly fine. We took potentially 2 winners right there, 1 loss. Perfectly fine. Then afterwards, we are seeing it's disrespecting. It's not following through right there. This is where you want to stop trade. Stop trading. Because now we need to go back into the 1 hour. We need to go back into the 1 hour because the 1 hour is there, is our compass again. It's our guide to whatever it wants to do right there. So here we stop trading. We stop trading fully. And we go back into the 1 hour to see, all right, we zoom out and now we want to be aware again. All right, we have actually a fair value gap that is being created right there, which we could trade into as well. Perfect. Then we want to be very aware. And now as well, what do we want to be aware of as well? We want to be aware of what? Structure. What is structure here? This right there is your intermediate term range. So from that high to that low is your intermediate term range. So if price wants to follow through, it should not take out that high, even though there is daily fair value gap right there. See how this is way more advanced and this is way more difficult for me to explain to you as well. I try to communicate it as best as I can. If you do have questions, again, please do let me know because we need to get this very clear if you're trying to trade this. But this is way more advanced than a filtering process trading plan. It's the same exact concept, but it is really advanced. So right here, we could make the argument at that moment in time that we might be trading towards that daily fair value gap right there. But again, we have 1 hour structure against us. We constantly want to be monitoring what is structure doing, what is order flow doing, what is candle signs doing. So we can have a trade ID. That is very important. Again, if we have this ST right there and we want to trade towards that daily fair value gap right there, which could be the case. All right, perfect. Then we have this fair value gap right there. We have an aggressive reaction higher. That is where we potentially can get involved. Now, we can use a 5 minute ST right here. Or we can use a 1 minute ST plus re. Again, so that is a 5 minute ST based on a 1 hour PD array. You want to either use a 5 minute ST or a 1 minute ST plus re. I would prefer in this case a 1 minute ST plus re because I like to trade off of ST plus re entries. I would prefer a 1 minute ST plus re right there. So that in the last hour of trading, you have this ST right there And then you have this potential entry right there covering that and targeting higher. That could be an entry of itself already. Then, or the 5-minute ST right there could also be a potential entry covering that low right there. And then eventually, again, you would hold this overnight, of course. That would not be ideal at all. But that could also be an entry eventually. So that is how you would be doing. Again, 15-minute PD rate, you use 1-minute ST only. So 1-minute ST and then follow the reads after on the 1 minute as well. So then if we follow, again, we follow along with price. So that could have been a potential entry right there. Let's see if the 1 hour wants to follow through on those highs right there. All right, eventually it does that. Oh, not too fast, not too fast. Now let's look at what are we doing. We still have that bearish structure. So we're a bit in between because we have the daily Verwijgen gap, but 1 hour structure is still bearish right there. So we want to be very aware of that. Now, how can we be very aware of that? We can be very aware of that by seeing what candle signs is doing. What is candle signs doing again? We have this, we are respecting that 1 hour Verwijgen gap. Perfect, so there we can still trade that. And again, we can see that respect already on the lower time frame, of course. We have this 1 hour Verwijgen gap, we don't trade into it. Again, this is all London, so ideally we want to avoid it as well. Then we have this 1 hour Verwijgen gap. We don't trade it, but we can of course monitor it because it will tell us what it wants to do. So right here, we have this 1 hour Verwijgen gap. What is happening? We are respecting it, but we are not creating a new Verwijgen gap. We have a big expansion lower. Once you have this big expansion lower and even that candle, what does that create? Disrespect 1 hour. What does that create? Next step, 15-minute PD rate, because now we need to find a boundary to go into the 1 minute time frame. Again, the reason we do that is to capitalize on that 1 hour disrespect move. Because if we constantly need to wait on the 1 hour to align, etc., that will take a lot of time right there. So we want to capitalize on the moves to follow through on structure, because if structure wants to continue here, what will it do? We had this move, intermediate term low, intermediate term high, intermediate term low, intermediate term high, potentially, intermediate term low. Target is this low right there. So the 1 hour right there, disrespect 1 hour, 15-minute PD rate. Again, you can see that it's really interesting because on a flow trading plan, you are, yes, you mainly look at order flow as well, but you are less reliant on order flow itself, because in a filtering process trading plan, what you are constantly doing is you are constantly trying to find the next order flow move based on the 4 hour, daily, weekly, or monthly. You're constantly doing that on a filtering process trading plan. With a flow trading plan, you are constantly looking at structure and candle signs on a way more advanced level, more so than order flow. That is very interesting because you are more so paying attention to structure and disrespect on a flow trading plan basis, and on a filtering process trading plan, you could even argue a filtering process trading plan, you only need order flow. But on a flow trading plan, it's actually the opposite, because we also want to achieve the opposite. Now, why can we do this? Why can we pay a lot of attention right here? Because we don't have to monitor a lot of pairs and instruments. So we can pay full attention right here. This is all things you want to pay attention to very closely. So here, we don't follow through on that Verwijgen gap. Again, that is part of order flow. Again, everything comes together right there. Candle signs, order flow, structure bearish, order flow doesn't follow through, candle signs doesn't follow through because we disrespect that right now. So now we seek a 15-minute PD rate to go into the lower time frame. Perfect. Right there, 15 minutes Verwijgen gap. We can already look to trade that first candle, of course. And what do we see? Do we have a 1 minute ST right there? We have a 1 minute ST right there. Could this have been a loss? Yes, very well, that could have been a loss right there. Then eventually, right there, we have a new ST in the form of that ST right there. And that is the one that plays out. Again, a 1 to 2, perfectly fine. We start very easy right there. Then eventually, the follow-up would have been this one as well right there. That is your follow-up trade. And then again, which cycles or which phases are we trading right there? Let's get the anchor text. This was 10:39. Let's just say 10:45. So 10:45. And if we go into the 15 minute, then again, we can see we are trading at 1, 2, perfect. Boom. That is your expansion phase. That is where you want to be careful already. That third candle, then the fourth candle, you don't want to trade that. So now you want to have a new boundary again to go into that lower time frame again. That is very important. So a new boundary again can just be this order block right there, and then again you would follow the 1 minute time frames, etc, etc, etc. That is very important. And whenever you're unsure of whatever price wants to do right there, because now based on candle signs, what are we doing right there? Well, this does not really seem like it is respecting that right there. So based on candle signs, you can, if you want to go into the 1 minute, you can just demand more of price. So if you're not sure and you want to wait for a re as well, then just wait for a 1 minute re instead of just 1 minute ST. So this is very important. This is exactly how you would go about it. So then eventually we continue lower right there. And that is exactly how you want to go about it, about a flow trading plan. Now, of course, we can also just use 1 hour fair value gaps and 1 hour PD arrays. For example, we currently have today this 1 hour fair value gap. We're very close to those lows, so it could be very reasonable that we follow through on that 1 hour fair value gap to continue lower. We can use a 5 minute ST, for example, a 5 minute ST. We already took target again in a flow trading plan. In a filtering process trading plan, I would be very strict on already taking the target. Flow trading plan, it is a little bit different, where that context is a little bit different. It's still the same exact concepts that we're using. It's just you're using it a little bit different right there. So again, 1 hour ST or 5 minute ST, excuse me, right there. And then we can continue lower off of that potentially. Or you would go into the 1 minute and look for a 1 minute ST plus re, which would be my preferred thing to do right there. So that is a flow trading plan. You are monitoring the 1 hour structure, the 1 hour order flow, the 1 hour candle signs constantly. For example, right here, we are still wicking that fair value gap. Now, eventually, if we do disrespect the fair value gap, for example, and we close above it or close inside it eventually, then we can say it's not really following through. All right, we can look into the 15 minute to look for a boundary, to look for a discount array, to go into the 1 minute eventually. That is exactly how we want to be using that. So let me finish off the notion right here. You are a master of navigating the 1 hour and being aware of your high time frame surroundings. Make use of time, liquidity, fake tops and bottoms, premium and discount. Follow 1 hour until opposing ST from daily PD array. Again, that is very important to understand as well. Once we do reach a daily PD array and we have an opposing ST, etc., then you want to be very careful. So you're constantly monitoring that 1 hour. What are we doing on order flow, structure, and candle signs basis? That is very important. You're constantly monitoring that. And again, the top down, you mainly pay attention. The top down is a little bit different because the top down, you mainly pay attention to monthly, weekly, daily, and you mainly pay attention to the candle signs, and then you drop down into the 1 hour. That is very, very important. You're constantly seeing what can the next day expand towards. Is the 1 hour agreeing with that? Do we have a boundary to go into the lower time frame? That is constantly what you want to be doing. The boundary is either a 1 hour PD array or it's a 15 minute PD array right there. That is very important. You can study the instrument that you want to be trading. Hindsight backtesting, this is way easier than with a filtering process. This is the flow trading plan. Again, this is something we will touch on more and more as well in coming months, when we will, of course, have live examples as well. That is very important. Again, just a reminder, just a disclaimer as well, that this trading plan is way more advanced than a filtering process trading plan. So be aware of that. Again, if you do prefer to trade one instrument, then try to master this, and I'm sure you are able to do it. All right, perfect. Thank you.